example is the stock that I just added to my long-term portfolio, UPS. If you look at a UPS chart, it's been in its own bear market the last 3 years, while the indexes have gone up 60, 70%. And UPS is down 70%, literally. Or Lululemon is also in my long-term port. So with that said, reminder, I have 4 stocks in my long-term port. I bought Google in April, got very lucky with it. In fact, I just sold, in my long-term port, I tried to go for 1 year, 1 day for capital gains taxes, as opposed to doing short-term trading is short-term capital gains. The tax treatment is a lot different. Everybody's different. Where you trade, if you have a LLC, if you have a sub-S, how you run your business is your business. I'm not going to give any advice because I'm not an accountant or a tax attorney. But the way I have set up mine is that I try to go for 1 year, 1 day to take advantage of 19% long-term capital gains taxes. So what I did is I bought Google at 152 during April's tariff crisis. And stock is 330, right? Well, it's great. It's more than a double and a half or almost a triple. I'm not going to sell it for tax purposes, obviously. I could sell it January 1 and push the taxes to next April, but I want to take advantage of the long-term capital gain structure that we have. And how did I do that? So I bought the stock actually April 20th this year. And so I went and sold May 350 calls for $26 or $26.50 yesterday against the shares that I bought. So that will put me over 1 year, 1 day. And if it does get called away, obviously I'm going to let it go. I do not like cover calls because it definitely stops you from multi-baggers on the upside, and it doesn't give you any protection in a bear market. But in some cases, I do like cover calls. In fact, I have some in my account, in my trading account at the moment. So those 4 stocks are UPS. I just bought UPS 4 days ago. I had Unity Software that I paid 21.5. That one I took to double. Unfortunately, I had to. I mean, doubles are to be taken. I have Lululemon. I think I'm up a little bit now. I have Cava, which I'm down on, not as much, maybe down 7-8 points, about 15%, and Google. So those 4 stocks. And I'm actually looking to add one more. It's pretty diversified, actually, but I'm looking to add one more. I have space for one more. And the allocation is about 20 to 22% on each stock. I have full position on Cava, full position on Lululemon, full position on UPS, and full position on Google. Obviously, Google has become a major part of the account now, just for the fact that it's more than double.